This class is going to be a review of our Elliot two-wave Fibonacci pullback system. Basically what it means is anytime a currency is strongly trending in one way, in this case this is a euro dollar 6 pips per bar chart yesterday, you can see it was falling with extreme weakness. Typically some of the highest probability trades are when it pulls back, goes back down an original trend, and then it makes another wave up. And anytime that hits a resistance area like the hourly moving average, we have the weekly pivot level here, and on top of that it is the Fibonacci profit target level of this first wave. Somewhere between the first and second fib target it usually finds resistance, and as soon as it comes back down underneath those bars low you can go short, or if you're an aggressive trader I would actually in this case wait for it to come back down because of how strong it went up. If it had went up with something looking like this with just mediocre or mild strength, you can just get short right at the hourly moving average after 2 or 3 bars going sideways here, because most of the time it's going to continue down. But you can see you're short at 100.20 and it pulled all the way back down to 96. That's a 24 pip move. And it came down, went sideways here. You probably get out of half your trade in the second half at the trailing stop. And a lot of times after you see that, if it goes down with decent weakness and then back up again without that much strength, you can look to sell here for small profit and in here for another 20 or 30 pip profit. Today you can see this currency shot up with a lot of strength. Here's the first wave pullback. Draw your fibs on there. Usually somewhere between the first, and I prefer the second, Fibonacci, the 1.61. In this case, it can pull back to the hourly, to the 1.61A. We have the monthly pivot underneath there. And when it breaks out above these bars high, you go long. So there was a trade yesterday, and there was a trade today. Yesterday you were selling the hourly, and today you're buying it because today's momentum is strong. And sometimes these trades, lead to some decent profits, and other times, in this case, it went up about 15, 20 pips. Major resistance right here and kind of stalled out. Even if you got out of half your trade right here, you locked in 6 pips and another 10 pips on the other half, you would have netted about 12 pips on that trade. And just like yesterday, after the pullback, it found support again and went back up. Here the market went up, a lot of strength. From the high to this, Control F brings up our Fibonacci. Draw your fibs on there. Notice it went right to the 1.618, and it also happens to be the hourly. And in this case, we also have a major support area underneath there, the 50-day moving average. So again, this one happened to be helped by the news announcement at 8:30, but when it goes above here, you go long. And you can see in this case, it shot up about 50 pips. Here's a beautiful, this is typically what the pattern looks like. You get a big explosive move up, draw your fibs on there. Let's make sure I have it accurately. And notice how close to the 1.618 frequently the market pulls back. And in this case, we have the whole number, which tends to be a support area if prices coming down to it from above. We have the hourly right there, which are also key areas of support that we look to buy at. And notice on the way up, this was just off the chart strong. The pullback had 1/3 to 1/4 the momentum that the previous wave had. And when this pulls back right here and goes above these bars, you're long right here at 12, and it comes back up into double tops, which frequently is the end of the move. But this went all the way back up to 0750, almost a 40 pip move, and this trade has a very high winning rate. In my opinion, from trading this for probably 4 years, I would guesstimate 70 to 80% winning. And when you can find an explosive move up followed by a two-wave pullback with very little weakness, and the daily, weekly, and monthly trend is up, when all time frames point up, it's at least 80% winning. Sometimes you're only going to make 5 to 15 pips, but usually make 2 to 3 times more pips in profit than what your risk is. In this case, using a 6 pips per bar chart, we put our stop just a pip or 2 underneath the low at 04. We bend this around 12. You're not even risking 10 pips, and you made approximately 40 pips in this. That is the key to trading. Small losses, big wins.